Why would anyone dump the safest investment in the world? That's the question rocking Wall Street right now, as the US Treasury yields do their best impression of a roller coaster. Is China behind all this, or are hedge funds cracking under pressure? Welcome back to WildPodX. Tony here. Today, 17th of April 2025. Here on this channel, we break down everything related to money, investing, crypto, and psychology. If you want to stay ahead in finance, be sure to subscribe. Let us dive into the market. Bitcoin has now been consolidating in the same boring range for over 150 days. Honestly, it's starting to feel like watching paint dry. Except the paint is also holding a ledger and whispering, "Hodl." Bitcoin is currently trading at $84,000. Still sideways, still snoozing, but remember, this is a part that separates real investors from gambler. People get excited at 100K and disappear when it drops back to $80,000. Not you though, you're still here. In the stock market, the S&P 500 is at 5,275, down 2%. Tesla is down 4%, trading at $241. And in my personal opinion, this gives us quite a good buying opportunity. Right, so here's today's deep dive. The US Treasury bond yield has been on a wild ride. Following a 10% drop in the S&P, the go-to safe haven, US Treasury, are behaving a bit like meme coins. The bond ETF TLT is down 10% in a week. And that's supposed to be the boring part of your portfolio. Let's break it down. Initially, as stocks sold off, money rushed into bonds, which is classic market behavior, like water flowing downhill. But then something strange happened. The 10-year yield dropped from 4.2% to 3.9%, then suddenly spiked back up to 4.2%, and then again to 4.6%. Now, a few decimal points might not sound dramatic, but in the bond world, that is absolutely chaos. Like if your nan suddenly start riding a skateboard downhill. It's not just unexpected. Frankly, it's quite dangerous. Some voices say China is dumping US treasuries. Sounds quite dramatic, fits the narratives. But if you dig a bit deeper, it doesn't hold up. If China dumped their bonds, the Chinese yuan would surge. Bad for their exports. And remember, China only holds about 2% of the total US debt, just 2%. And treasury market trades over $1 trillion daily. That's more than all crypto exchanges combined. Okay, so if not China, who is causing the panic? Possibly a combination of Chinese private fund and Japanese institutions. In fact, Japanese insurer and pension funds has been loading up on US bonds over years, riding the yen carry trade. But with the yen weakening and volatility picking up, they're pulling their money out of it to avoid foreign exchange losses. Sell US bond, buy back yen. Simple but powerful. And then there's also one sneaky culprit. Hedge funds doing arbitrages, the so-called basis trade. These trades rely on leverages, and when bond prices fall, margin call hits, and it turns into a doom loop. A bit like dominoes, but each domino is worth a few $billion. When all these cycles spiral, the Fed starts to panic. During COVID, we saw them unleash the money printer. If the bond collapse continue, history might just repeat itself. So definitely keep your eyes open. This might be one of those silent turning points markets only recognize after the fact. And just for a little inspiration today, Alan Greenspan once said, "Markets can remain irrational longer than you can remain sovereign." Classic line from a man who gave economic advice like he was reading tea leaves. Now on to today's top news. The first news, Fed Chair Jerome Powell just endorsed stablecoin legislation. Yes, the same Powell who once tiptoed around crypto like it was a sleeping dragon. Now he's saying stablecoins could have fairly wild appeal, but only if there's strong consumer protection. In other words, welcome to the regulated playground. No more dodgy tokens named after dog breeds. The second news, meanwhile in China, the country who banned crypto trading is reportedly using private company to sell off seized crypto asset. According to Reuters, local governments are essentially selling their digital loot to top up their coffers. It's like saying, "No crypto trading allowed it," while quietly asking, "Hey, so how much Ethereum for that lunchbox, huh?" In our third and last news, in a story that feels straight out of global drama series, China's freight orders are plunging, the trade war is hitting hard, orders are down, ports are quieter, and supply chain are, well, we've seen this before. Just another ripple in the economic pond that might turn into a tidal wave if things escalate. That's a wrap for today's episode. If you found this video helpful, please like and subscribe for daily updates. Ride the wave, stay invested, and I'll see you tomorrow.